In today's market update, we're going to be taking a look at a much requested instrument, which is Bitcoin. My name is David Hickson, and today is the 5th of August 2019. Before we take a look at a Hurst cycles analysis of Bitcoin, I would like to ask for your advice. I've been recording these market update videos for quite some time now, and I've received a wonderful amount of very positive feedback. One of the themes that has developed in recent emails that people have sent me is a request for more instruments, greater market coverage, more frequent update videos. And so I would like to find the best way that I can serve you in terms of applying a Hurst cycles analysis to your trading and investment decisions. So I have a question for you. When it comes to applying the insight of Hurst cycles, the kind of thing that I've been presenting in these market update videos, when it comes to applying that insight to your trading or investment decisions, what is your single greatest challenge? What is the thing that you find most frustrating? The biggest question that you have? What is most challenging for you? And there's a link on the screen now. So if you could go there and provide me with the answer to that question, I would really appreciate it. It will help me to make sure that I'm giving you the best that I can in terms of my knowledge and experience around Hurst cycles and trading on the basis of them. So before we take a look at Bitcoin, I must ask you to please make sure that you have read and understood these very important disclaimers. Here is a chart of the price of Bitcoin versus the US dollar. And I haven't ever actually recorded a market update video about Bitcoin. I did write a blog post about Bitcoin in December of 2017, pointing out that according to a Hurst cycles analysis, I was expecting an important peak to form fairly soon. A really big peak did form, I think just in a few days or perhaps a week after I posted that blog post. And I'll put a link to the blog post in the description under this video so that you can go and read some of what I had to say about cycles in Bitcoin. I'm going to not dwell on too many of the details in this video. I'm just going to get straight to the point in terms of what's happening now and what we should look out for. The first thing you'll notice, obviously, with a chart of Bitcoin is that it seemed to do nothing for many years, and then suddenly it shot upwards and then it came down again. And that looks like a cycle analyst's nightmare. But of course, if we take a look at the chart using logarithmic scaling, which is the scaling you see on the chart there, then you can see that in fact Bitcoin itself moves with a very good cyclic action. It's in fact a really good instrument to analyze. The cycles are ringing through fairly strongly, and so I would recommend, if you're going to do an analysis, that you take a look at the logarithmic chart, because it certainly helps. So you will also see that I have a peak analysis on this chart and a trough analysis. I am going to focus on the peak analysis in this video, and I'm not going to go into too many details about why I believe it's a peak analysis that we should be watching, because I've mentioned that in several other market updates, and I really don't want to repeat myself too much. The important thing is that I think that the peaks are where the cycles are synchronized, and so the cycles that are influencing the price action of this market are synchronized at their peaks. In other words, they all tend to form peaks at the same time, which means that we end up getting very sharp peaks, such as we saw in December of 2017. That was such an important peak that in many ways our entire analysis, the peak analysis certainly, can be based around that peak, because it was clearly a very important one. So we're just going to focus on what has been happening since that December 2017 peak. You will see that at the top of the chart we have the triangles, which is the way that Hurst always used to plot his peaks, and that peak is marked as a peak of the 54-month cycle. That's a 4.5-year cycle. Was it definitely a peak of 4.5 years? Not definitely. You probably know that I like to speak about my level of confidence in an analysis or in the position of a particular peak or trough, and in this case my confidence is definitely at the 18-month cycle level. Of course, that doesn't take very much, because it has been more than 18 months since that peak formed, and we haven't seen a higher price. So it's fairly obvious that that was a peak of at least 18 months. It was possibly, or perhaps probably, also a peak of the 54-month cycle. Nevertheless, in terms of what we're speaking about today, the important thing is that it was a peak of the 18-month cycle. And so, without going into too much detail about what has happened since then, it is fairly clear that if that was a peak of the 18-month cycle, the next peak of the 18-month cycle should occur 18 months later. So, the average length of an 18-month cycle, as discovered by Hurst in the 1960s and early 1970s, was 546 days. That is, in fact, 17.9 months. He called it the 18-month cycle because it's a bit tedious constantly saying 17.9 months. And what I find extraordinary is that the nominal model that he discovered 50 years ago still applies today. A nominal model is, of course, simply a list of the cycles that are found in a particular market that influence the price action. And Hurst studied the US stock market. He studied thousands of stocks or shares, the prices of shares, and analyzed those and found the common cycles in the stock market. It's a really fascinating thing that a new market such as Bitcoin, which has only been going for a little over 10 years, will exhibit very similar cycles to the cycles that Hurst discovered in the 1960s and 70s. Of course, we don't know for certain that those cycles are definitely exactly the correct cycles, and that has been one of the challenges with Bitcoin, is to work out which cycles are actually present. We know that cycles will vary from one market to another, and there's no guarantee that Bitcoin will exhibit the same cycles that the US stock market did 50 years ago. But the interesting thing is that at the moment, Bitcoin seems to be working with exactly the same cycles as influenced the stock market 50 years ago. The average length of the 18-month cycle, as I mentioned, was found by Hurst to be 546 days. 546 days from the peak in December of 2017 was in the middle of June. I think it was the 15th or 16th of June of this year. And as you can see, only 10 days later, a fairly prominent peak did form in the price of Bitcoin. So, was that definitely the peak of the 18-month cycle? Now, this is where the art of understanding and applying a Hurst cycles analysis comes in. No, it wasn't definitely the 18-month cycle peak. The important thing is that we were expecting an 18-month cycle to form a peak at that point, and a peak did form. It is probably, or should I say possibly, the 18-month cycle that did form there. However, I have a very important point to make about this. I think it's very important that we keep an open mind, and even when you plot triangles or diamonds, or perhaps your software plots diamonds or triangles to mark the position of a peak or a trough, I think it's very important that you don't just accept that that is definitely the position of that peak. It's important to keep an open mind and to actually say, well, we are expecting an 18-month cycle peak to form at around about this time, and then to make your trading decisions on the basis of that. And I know there are some people who disagree with me strongly, and they are looking for absolute certainty. I believe that it is possible to achieve absolute certainty even though you are keeping an open mind about some of the bigger picture elements about what is happening. And this is one of those times. So did the 18-month cycle peak definitely occur at the end of June this year? Not definitely. It probably did, possibly did, but we need to bear in mind that an 18-month cycle peak either has just occurred or potentially is going to occur fairly soon. So let's take a look at what has happened since that 18-month cycle peak that potentially formed at the end of June, and take a look at the shorter cycles and speak about what is happening now in terms of what Bitcoin is doing. Well, here you can see the analysis that has occurred since the end of June. We had a 20-day cycle peak over here after only 14 days, so a slightly short 20-day cycle peak. And then we had a possible, you can see it's a hollow triangle, it's a possibility, a possible 40-day cycle peak that formed in about the middle of July after 24 days. So that would have been an early 40-day cycle peak. So there's some uncertainty about those shorter cycles. What does that uncertainty mean? It means that the shorter cycles don't have a great deal of amplitude at the moment. They don't have a lot of strength. In particular, the 40-day cycle doesn't look as if though it really has any strength. And the 20-day cycle has very little strength. When the shorter cycles have little strength, it can be quite difficult to decide on where those shorter cycle peaks or troughs should be. Nevertheless, we can understand in terms of a slightly bigger picture exactly what Bitcoin is doing at the moment, which is that it is moving up from this trough over here at the end of July. There you can see price is moving up. That doesn't take a rocket science degree to notice. But of course, what it is doing is it is moving up into this 80-day cycle peak. So that is what Bitcoin is doing at the moment. The price of Bitcoin is moving up into the 80-day cycle peak. Now, what if this peak over here at the end of June was not the 18-month cycle peak? Well, it was certainly a peak of at least 80 days, if not 20 weeks or more. And so this peak that it is moving up to now is the next 80-day cycle peak. So what is the one thing that we can do with confidence at the moment in terms of Bitcoin is that we can trade that move up into the 80-day cycle peak and watch for the formation of that 80-day cycle peak. So when is that 80-day cycle peak expected? Well, the average length found by Hurst in the stock market 50 years ago was 68 days for the 80-day cycle, so that positions us right at the end of August, perhaps just into September. We have our nest of highs, which you can see over here, and let me draw a triangle around that nest of highs. That's the nest of highs going up to the 40-day cycle, a very nice neat nest of highs, which is centered around about the 17th or 18th of August, I would say. And then, of course, we have the circle for the 80-day cycle with its whiskers, the lines on each side, giving us the range of time that that 80-day cycle peak could be expected to form. So this period of time over here, from about the second week of August up until perhaps just a couple of days into September, is the range of time in which we expect the 80-day cycle peak to form. It's probably going to form in the earlier part of that, or it's more likely to form in the earlier part of that range of time. Now let's speak about where that peak is going to form, because here we have a peak that is possibly an 18-month cycle peak. Is it possible that price comes up above that level and forms its 80-day cycle peak above that level? Yes, it is possible. Because of what I mentioned earlier in terms of keeping an open mind, we need to bear in mind that the 18-month cycle peak is expected, and it is possible that the price will come up above this level, in which case the analysis will shift and we will see the 18-month cycle peak being positioned over here. If price does not exceed that level and instead forms a peak below that level, then that peak will be labeled as the 80-day cycle peak, and the 18-month cycle peak will remain at this position at the end of June. I hope that this is clear. I often get questions about analysis changing and things shifting and things like, do the indicators repaint? Well, yes, because an analysis is a dynamic process and you need to have an open mind understanding all the possibilities. The important thing in terms of what is happening now, in my opinion, is that price is coming up to a peak that is expected around about the end of August. We'll see where that peak forms and be able to clarify with greater detail later exactly what magnitude that peak is. I would like to show you one other thing with regards to this analysis of Bitcoin, and that is what is called the composite model line in Sentient Trader. The composite model line simply takes the information that the software has about the cycle analysis that you have performed It takes all of that information, the wavelength of the cycles, the amplitude of the cycles, and it recomposes that information to show you what price would have done if the only thing influencing price were the cycles. It's an important thing. There are many things that influence the prices of financial markets, and cycles are, in my opinion, the most important, but there are other things as well. And so displaying the composite model line, which is this orange line over here, shows you how well your cycle analysis matches what has happened in the past and gives you an idea of what the cycle analysis is telling you to expect in the future. So here you can see that the composite model line is showing the price came up to an 18-month cycle peak over here, and over the next few months it's going to come down again. Towards the end of 2019 it's going to form another low point in its price movement. But there are a few things to point out here, which is why I thought it would be a useful way to end the video. One thing is that you can see a divergence, and let me zoom in here and add just a little more detail to that composite model line. Here you can see a divergence between the composite model line and the price action. You can see a low point there in the CML and another one there, and indeed those were low points in the market, but the market did not come down as low as would have been expected by the cycle analysis. And recently it has moved up much faster and further than would have been expected by the cycle analysis. And this is an important aspect of applying the CML to your understanding of what is happening. The CML shows us the structure of the market, when to expect low points and when to expect high points in terms of time. When you get a divergence between price and the CML, it is a clear indication that there is something potentially missing in your analysis. What might be missing in our analysis? What might be missing is the fact that this 18-month cycle peak has not yet formed, and we are still going to see that 18-month cycle peak form a little bit ahead of us. If that is the case, nevertheless, we need to keep our eyes very closely on the market during this period of time towards the end of August, which is when that peak is expected to form. I do hope that you found today's market update interesting. Thank you very much for your interest in Hurst cycles, and please, if you do have a moment, give me your advice about what it is that you find most challenging about applying the insight of Hurst cycles to your trading and investment decisions.